What's up, you guys? Welcome back to another video. Today we're going to be going over the two main causes of inflation since the financial media and government seem to not understand and get it. I'll be helping you guys out with that today. And at the end of the video, we're also going to be going over busting one of the, we'll call it an inflation myth. So let's get right into it. All right, so concept number one here, the basics of supply and demand. And in this particular instance, we're going to be talking about real stuff that we buy on a daily basis in the real economy. So we could imagine that if we have the supply of the things that we buy on a daily basis remaining constant, while at the same time the demand of these things is going up because people feel more comfortable, they want to spend a little bit more, everybody's happy, blah, 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 could be whatever, any one of those reasons, then the prices of those things are going to have to go up in order to slow down the rate of consumption so that there's always a constant supply of goods and services there. So on the flip side of that, demand starts to crash and go down. Prices have to come down in order to find buyers in the market. Now, for whatever reason, I'm not really too sure why, but the financial media, they really only like to focus on the demand side of the equation when they talk about economics. I don't know why, because it's only 50% of the equation. So on the flip side of that, the supply side of the equation, assuming that demand is remaining the same, if supply of the stuff is going up, that means entrepreneurs and businesses are producing more goods and services for people in the real economy, then the prices of those things are going to just naturally go down. It is what it is. On the flip side of that, we get all of this government red tape and regulation, stuff like that, makes it harder for people to open businesses, makes it more difficult and just more of a pain in the neck to produce more stuff for people in the real economy. Then that's going to drive the supply of goods and services down, while at the same time demand is remaining constant. That's going to make the prices of the things that we buy on a daily basis to go up. Okay, so the second thing that causes inflation is the amount of currency units that are in the system chasing those finite amount of goods and services. So we have to understand a really key concept here, and that is, what is money and how is it created? So all money in the system, or all currency units that we transact with on a daily basis, those are all debt that have been borrowed into existence and are owed back to a private bank with interest on them. Therefore, all money that is created in the banking system. The Fed, or the Federal Reserve, Central Bank, Bank of Canada, European Central Bank, they don't actually create dollars. What they do when they're doing quantitative easing is they're creating bank reserves, and they're swapping those bank reserves with assets on the bank's balance sheet. So this is going to be really important to understand, because like I talk about a lot on my channel, I like to compartmentalize asset price inflation versus real stuff inflation, because they're not one and the same. Couple of the concepts as to why assets go up and real stuff goes up are kind of a little bit the same and similar, but the way the transfer mechanism works is a little bit different. So, for example, in 2020, when we saw, the pandemic first hit, and, there was a huge panic, everybody thought the world was going to end, and, blah, blah, blah. The governments and central banks around the world came out and worked together to create these massive fiscal packages to basically give to the people. So essentially what happened this time around versus kind of in the past in 2008 is quantitative easing was used to recapitalize financial institutions so that they could go out and make more loans and, do all of this stuff in order to create more dollars. This time around, the Federal Reserve, or the Bank of Canada, was directly monetizing government debt, and that those new currency units were directly going to the people and other various fiscal projects and programs that they had going on, whether that's infrastructure spending or social programs. Could be any one of those two things. So this is what I always say, is that we don't print our way to prosperity, we produce our way to prosperity. Obviously, the more stuff that we have, or more goods and services that entrepreneurs and businesses are producing, that's naturally going to drive the prices of those things down. The more currency units that we have circulating in existence, on the other hand, well, if we don't produce any more things, for those same currency units to chase, then basically what we have is, a situation where we have more currency units chasing the same finite amount of goods and services. So therefore, prices of those things have to go up in order to slow down consumption, so that we can get back to that equilibrium of supply and demand, and things are stable on that front. So two really key points that I wanted to hammer on here just before we wrap up the video is that when the central banks are just strictly doing quantitative easing for recapitalizing financial institutions and whatnot, that's inflationary for asset prices. When they stop doing that, when they stop quantitative easing and raising rates and all that good stuff, what that does is that removes liquidity out of the system and makes asset prices fall. People are going to say, oh, well, fundamentals of the companies and the businesses matter. I mean, maybe a little bit, but honestly, let's be realistic here. We've basically seen a liquidity-driven stock market, bull market for the past 2 years. And I think that party is going to be ending, in the next 6 months to a year. So understanding that is also important. But on the flip side, we have the government and the fiscal side of things, where if they're pumping out more currency units into the real economy, well, that's going to be really inflationary for just everyday people just looking to survive, because you have more currency units that are chasing, a finite amount of goods and services, while at the same time, they seem to just love coming out with more rules, more regulations, more BS that, just hinders entrepreneurs and business owners from, producing more stuff for the people. And you have those two forces, working together at the same time. That's a pretty disastrous recipe for, things that we buy on a daily basis to continue to go up even more. Now, on the flip side of that as well, just like we talked about with, asset prices and stuff like that, the government starts to not do that. They start to act a little bit more responsible. They start to spend a lot less, or even not at all. Basically, what that does is that removes or helps remain currency units at a fixed amount. So we have to ask ourselves when we're investing, is the government being responsible, or are they being reckless? And there's times in certain assets that we want to be holding in those environments. And I'm going to be coming out with another video next week talking about portfolio allocation, asset allocation and portfolio construction, so that you can recognize these things and be able to understand where you want to put your money in each sort of environment. Is monetary conditions loose, and is fiscal spending really high, or is it the opposite? So we're going to be going over that next week. But in the meantime, if you guys got value out of this video, I'd really appreciate it if you liked the video for me. Give it a thumbs up. Get this video out to more people, so that we can basically stop the gaslighting and the BS that the financial media and government's trying to feed us with, saying, oh yeah, inflation's Russia's fault because blah blah blah, the war, this and that. I mean, the seeds were sown kind of a couple years ago when they came out with all this fiscal spending. We're just getting the units of currency starting to filter through the system now. And if you guys like this kind of no BS approach that I like to take when it comes to talking about markets, money, financial education, all that kind of stuff, be sure to stick around and subscribe. I try to come out with 2 videos a week for you guys, so that you can make better decisions for not only yourself, but your family members as well. Get a better understanding and a grip on how money works and what the hell it actually is. So thanks a lot for watching, and we'll see you on the next one.